Hi, myself G. Rajkumar Nair, retired General Manager, Punjab National Bank. Today's presentation consists of two subjects. One is education loan and the other one is tips on study abroad formalities. Study abroad has become a dream for young Indians nowadays for the last few years. To avail quality education abroad, a decent job, quality standard of living abroad, and also due to the poor job situations or employment situations in India. Education consultants arrange for admissions on a meager fee. They also arrange for visas and banks give education loan. Though it appears a dream come true situation, a student has to make a deep research academically as well as financially based on his own situations and surroundings, on selection of the country, course, potentiality for getting a decent job, enough salary to repay EMIs on education loan, the take home salary post tax of 25 to 35% even from the beginners in the foreign countries. All these things are to be deeply analyzed. Like Indian professional colleges, overseas universities or colleges are also charging higher fees for the Indian citizens. Not only Indian citizens, any overseas students. Many of these colleges are depending majorly on overseas students. Now, let us look into the education loan schemes in India for study abroad in a broader manner. Though all banks provide education loans, I am taking PNB scheme as a base, as there is slight difference in interest rates, collateral terms, tenor, etc. from bank to bank. So better you have to make a check with your bank to take a final call. Once you get admission through the consultant or otherwise or direct, you will get an offer letter from the college or the university giving complete details of the semester-wise tuition fees, living expenses, hostel fee, library fee, security deposit, health insurance, etc. and an indication of the overall cost throughout the course. Copy of this offer letter is to be submitted to the bank, based on which they will sanction the eligible loan amount and decide the disbursement schedule as per the offer letter terms. Let us see what are all the terms of this education loan. Education loans are given for job-oriented degree, diploma and postgraduate courses duly approved by the regulatory authorities of that country. Tuition, library, exam, laboratory fees, caution deposit, cost of computer and books, travel expenditure, hostel rent, study tour expenditure, health insurance, living expenses and 1 year deposit in a blocked account in a bank are covered in the loan amount. That means almost all expenses related to the course from beginning till end is covered in this loan amount. However, one has to note that the maximum amount of loan sanctioned is rupees 20 lakhs. Out of this, up to 7.5 lakhs is given without collateral. Above 7.5 lakhs, collateral security by way of landed property, NSC, LIC policy or whatever securities are generally acceptable to the bank will have to be given as a security. Up to rupees 4 lakhs, there is no cash margin required. For above 4 lakhs, 15% cash margin is to be given as and when disbursed. That is, at the time of sanction you need not give the cash margin. Whenever the money, the loan amount is released, that time you have to give 15% cash margin. If you are getting any scholarship from the college or overseas university, that will be counted as a margin. Okay, loan is given in the joint names of the student and the earning parent or based on their guarantee. All fees, caution deposit is remitted by the bank directly to the college account. That means it will not be given to you. It will be sent on your behalf, it will be sent to the college. Remittance to blocked account is sent to an overseas bank account in the name of the student, which is to be opened by you beforehand. Payment towards books, computers can be given against invoice. Normally, the amount to blocked account will be about $10,000 equivalent. Out of this, around approximately $800 equivalent will be released to the student on a monthly basis towards his living expenses for the first year. This is to avoid a situation of not having enough money for living after reaching abroad. The interest on education loan, as I already indicated, it varies from bank to bank. It will be on an average, it will be around 8.5% to 10.5% per annum, with simple interest during the moratorium period, that is up to 1 year after completion of the course. Thereafter, it will be on compound interest basis. Interest will be calculated only on the amount released and not on the sanctioned amount. Suppose you got a sanction for 20 lakhs and you have availed only 10 lakhs loan, then that interest will be calculated only on that 10 lakhs loan. But being a one-time fee, the processing fee and document fee which is collected by the bank will be on the sanctioned amount. That is, if you get a limit sanction for 20 lakhs, this processing fee and documentation will be calculated on the 20 lakhs itself. So if your intention is to avail less, you can wisely take a lower amount if you are having some other source for the study purpose to partly meet the cost. If your admission is to a top ranked university, there is possibility of getting a higher amount than 20 lakhs. This is mainly because the fees in top ranked university will be high and the potentiality for getting a highly paid job is also high. Another advantage for top ranked university admissions is a reduction of 1% in interest will be given by the bank. EMI starts after 1 year of completion of the course or from the next month of obtaining a job, whichever is earlier. Tenor of the loan normally will be 5 years to 15 years depending upon the banks. Another advantage or incentive is that if you remit all the EMIs in time, you will be given a 1% reduction in the interest rate at the end of the tenor. But that is, after paying all these installments, you will be given 1% reduction. This you can do by remitting funds to your NRA account opened with the same bank and giving an authorization for transferring these EMIs in time. No prepayment penalty if the loan is prepaid in advance or closed prematurely. If the loan amount is not sufficient to cover the entire expenses, parent can also send own money from the same bank or any other bank by submitting an application in Form A2. There is provision under LRS scheme that an amount up to $250,000 can be sent abroad for study purposes in a year. This much amount may not be required. This is a general scheme for various other purpose. Under this scheme, the amount can be sent for study purposes also. This time I have been talking about the terms of the education loan. Now I would like to bring to your kind attention some critical points which are to be considered by all those who decides for availing large amounts. Some people feel that even 20 lakhs is also not sufficient. That is why I am saying. See, I already told that there is a moratorium period. This moratorium period is the course period plus 1 year. For example, if it is a degree course, 4 year plus 5 years. During this 5-year period also, bank will be charging interest. The only thing is that it is a simple interest. Suppose the bank interest is 10%. During this 5-year period, it will become 50%. That means a 20 lakhs loan will become 30 lakhs by the time you have to start repayment. This is a point which you have to consider. The second point is that in advanced countries like UK, Europe, Australia, Canada, a tax of 25 to 30% will be deducted from the salary from the beginning itself, unlike in India. In India also, if salary is very high, it will be deducted, that is a different thing. But there, it is compulsorily it will be deducted, which many people may not notice. Many students may not notice. So one should remember that his net salary available for EMI is post-tax salary minus his living expenses there, and the repayment continues from 5 years to 15 years. This point should be calculated by all. So the point I want to convey is that if there is own source of funds, better to avail as less loan as possible, even if bank sanctions a higher limit, to reduce the burden of repayment on the student at an young age, to avoid bank acquiring collateral in case of default. Thank you very much. The next session, tips on study abroad, will be presented in the second volume. It will be presented by Mr. Rahul Rajkumar, who is having hands-on experience being a student of Master International Management in Germany. Thank you.